All right, people. The next topic we'll be revising is preparation of financial statements. Okay. So now financial statements, this particular topic deals with preparing your balance sheet and preparation of your P&L account. Again, a pure format driven activity, and one or two extra concepts are there which we will revise. So first we will directly go into the balance sheet preparations. Then we will come back to this charts. So you have prepared a lot of balance sheets. So tell me the balance sheet format. Heading wise, balance sheet of so and so company as on so and so date. Not date, no, particulars, note number, current year column, previous year column. Because we don't prepare only give current year ka data, we also give previous year ka data. But usually in these sort of problems, last year ka data will be missing. So you can only have three columns: particulars, note number, and amount. So under particulars column, Roman letter 1, equity and liabilities. Under that, point number 1, shareholders funds. Under shareholder funds, point number 1, share capital. Then reserves and surplus. Okay. Next is non-current liabilities. Under non-current liability, long-term borrowings. Under long-term borrowings, you prepare a separate working note for long-term borrowings and you show bank loan, debentures, etc., etc. Then point number 3, current liabilities. Under current liability, creditors and all the short-term provisions, short-term borrowings, creditors, outstanding expense, all that will arise. Then the total up. Then Roman letter 2, assets. Under assets, point number 1, non-current assets. Under non-current assets, property, plant and equipment. Then intangible assets. If you have any intangible assets, under development. If you have any capital work in progress, most probably all the data will be missing. Then if you have any non-current assets, non-current investments, that also comes under non-current assets itself. Then point number 2, current assets. Under current assets, you'll show your inventory, debtors, etc., etc. Yes, sir. So all this is your usual format. And then what is the P&L format? What is P&L format? I don't know whether I have it. Yeah, I have it. What do you know? Okay, P&L format is what? Revenue from operations. Then other income. Revenue from operations and other income, if you total, you will get the total income. Then you will put up all the expense. Give the heading as expense and call out all the expenses. First expense is what, sir? Cost of material consumed. How do you get cost of material consumed? Cost of material consumed is nothing but opening stock plus purchase of raw material minus closing stock of raw material. Okay, then it will be purchase of finished goods. Purchase of stock in trade, that is nothing but your purchase of finished goods. Then changes in inventory. Changes in inventory, what do you capture? Opening stock of WIP plus opening stock of finished goods minus closing stock of WIP minus closing stock of finished goods. So basically all these are trading account components. All the trading account components is captured in these three components in your new schedule 3 format. Yes. Then you will capture what, sir? Employee benefit expense. Employee benefit expense means whatever you pay. We've already done whole of IAS 15. So all that will come under employee benefit expenditure. Then it will be your finance cost. Finance cost means your interest charges that you pay on your loan, debentures, etc., etc. Then depreciation and amortization. Depreciation on property, plant and equipments. Amortizations on intangible assets. Then last residual category called other expense. So whatever you could not fit in the above column will come under other expense category. Then you will get the total expense from income minus expense. If you do profit before tax, then you will deduct what, sir? Don't say tax, say tax expense. Tax expense constituents are in this, all that in preparation of financial statements, all that is not relevant, just for our revision. Tax expense means current tax plus deferred tax plus MAT credit, if any. Okay, then you will get profit after tax. Then finally in your P&L you also need to report EPS. So you know this already. All this data we need to give it for continuing operation. From here to here, what you give it for is for continuing operation. Discontinuing operation only you need to give 3 data: profit before tax of DO, tax expense of DO, and profit after tax of discontinuing operation. CO and DO ka profit, if you add, you will get the profit for the period. Profit for the period is nothing but your total operations. After that, here your P&L ends and you need to prepare. After that, you need to give a disclosure of EPS. 2 types of EPS: basic EPS and diluted EPS. All this will not come in your discontinuing operations, and all will not come in your preparation of financial statements. So they'll only give you current continuing operations data. Fine enough? Okay. So the crux is to remember the format and apply it in the question. Can we directly take one question and see how well we remember all this format? Yeah, okay. Now one question, I think that's come in MTP only. So we'll take that MTP question only. The same question is there in our study material also. It's a repeat question. But this question, they've added a few extra things. That's all. Following is the trial balance of Delta Limited as on 31st March 2023. All the numbers are in thousands. So what we'll do is, sir, we will read the data, and moment we read the data, you have to tell me whether that components comes in balance sheet or P&L, because here you have to prepare balance sheet as well as P&L. The requirement is both. You need to prepare balance sheet as well as P&L as per the schedule 3 format. Okay, ignore previous year's figures and as well as ignore tax they have told. Okay, so all that of information is missing. So all you have to tell me is balance sheet component or P&L component. If at all you say balance sheet, where in balance sheet it will come, like that. So one by one we will see, and one by one we'll tick off in the balance sheet like this. Unticked we will see it later. Some extra disclosures will be there. As and when I see that, I'll go on telling you that. Then we'll go back to our chart book. That only I've discussed. Again, we will rediscuss that. Yes, that's the approach we will follow. Can we? Okay. First, land, sir. Land will come where? Balance sheet. Under where? Under non-current assets. Under non-current assets, we have a category called PP. It will come there. 800. Yes, no? So, normally we prepare a note for it. Come to note number. They prepared note number what, sir, for PP? Note number 5. Come to note number 5. We'll take off 800. Yes. This is your note number 5. Land ka value is how much? 800. Don't worry about other adjustment. As and when we see, we'll take off. Later, we'll worry about the other adjustments. Yes. Okay. Next is what, sir? Calls in arrears. So, what do you do for calls in arrears? Calls in arrears is deducted from the capital. From equity share capital, you will deduct it. Yes. Calls in arrears is related to share capital. No? So, you'll reduce it from equity share capital. Normally, we prepared note number 1 for equity share capital. So, check, have they deducted 5 from equity share capital in note number 1? This is your note number 1. They have reduced 5. There's nothing but your calls in arrears. Other things, we'll see it later. Okay, next is what, sir? Where is the next item? Cash in hand. Cash in hand, where it will come? Under asset side in balance sheet. Under which side? Current assets. How much? 2. So check, have they shown for this and all? You don't have, I mean, you, in fact, in current assets, you show cash and cash equivalents. So for cash and cash equivalents, they prepared note number 7. Now I'll tell you the disclosure for this. When you prepare cash and cash equivalent, no sir, cash in hand you need to show it separately. Cash at the bank you need to show separately. Cash in hand separately, cash at bank separately. And even cash at bank, how much bank balance you maintained with scheduled bank you need to show separately. How much bank balance you maintained with other banks you need to show it separately. So for now, how much, what have you got it? You only have got cash in hand. How much is cash in, or in fact we have got cash in hand. How much is cash in hand? 2. So check, have they shown that in cash in hand ka note, working note? This cash and cash equivalent, cash in hand, they've showed it to 2. Comfortable, huh? Okay, come to the next one. What is the next one, sir? Plant and machinery. Plant and machinery will come where? In PP ka working note. In PP ka working note, check, have they taken 824? Yeah, this is your PP ka working note. Plant and machinery is shown at 824. Other things, we'll see it later. Next, trade receivables, inventory. Inventory as on 31st March. So 31st March ka inventory is what, sir? Closing stock. So trade receivable and inventory, where it will come? In your balance sheet, current assets. So 120 and 96, check in your balance sheet if they shown. So 120 and 96. Sir, for trade debtors also, you need to have a working note. You know what you need to show? Anybody remembers the disclosure? For debtors, what do you need to show the working note? Debts outstanding for more than 6 months and other debts. If any debtor is not paid you the money for more than 6 months, you have to show that debtor separately, and other debts you need to give a disclosure. That we will see it later. They'll give that in the disclosure. We'll see it later. For now, we have got the total amount, no? Okay. Next is what, sir? Okay. What is the next component they've given? Cash at bank. Cash at bank will come where? In cash and cash equivalent. What is the cash and cash equivalent total? I mean, cash at bank they told 28. 28 we have found off. No, we'll do it later. As I told, what disclosure you need to give for cash at bank? How much balance is with the scheduled bank and other banks? All that information they'll give in notes to accounts. For now, let this be there. Okay, next what, sir? Adjusted purchases. Sir, adjusted purchases means, how do you get adjusted purchase? We have solved the same question in regular class. Adjusted purchase is nothing but opening stock plus purchases minus closing stock. Sir, usually closing stock will not come inside the trial balance. Closing stock will come outside the trial balance. What have they given over here? Trial balance. Usually closing stock will never come inside the trial balance. It will come outside. Why? Because closing stock is already included in purchase. Closing stock is already included in purchase. That's the reason, again, if you show closing stock and trial balance will not match. But here, have they given you normal purchase or adjusted purchase? Adjusted purchase. And how do you calculate adjusted purchase? Opening stock plus purchases minus closing stock. So the closing stock was included in purchase, but through adjusted purchase, what did we do? We excluded. So that means now does purchases include closing stock or it is excluded? Since closing stock is excluded from purchase, now can closing stock come inside trial balance? Yes. That's the reason closing stock is coming inside the trial balance for you. Closing stock is coming inside the TB. Understood? Because it is eliminated from purchase. Whenever they give adjusted purchase, opening stock will not come inside trial balance. Why? Because how do you get adjusted purchase? Opening stock plus purchases. So opening stock is already added with the purchase. Hence, opening stock will not come inside trial balance, but closing stock will come. Otherwise, usually what will come? Opening stock will come inside trial balance. Closing stock will come outside trial balance. But when they give you adjusted purchase, opening stock has been added to purchase. Hence, opening stock will not come. Closing stock has been eliminated from purchase. Hence, closing stock will come inside trial balance. Easy? Okay. Purchase is how much, sir? 400. Where will purchase come? In balance sheet or P&L? P&L. Balance sheet or P&L? P&L. In P&L, you have a category called purchase of stock in trade. Okay, show there only. So how much is that purchase? In P&L, are you able to see purchases adjusted 400? Yeah, that's what we have shown. Okay, next. Most of the things over here also will not involve calculation. Just taking the data and dumping it into format. The maximum marks you will get is only for remembering the format and presenting in proper notes. That's all the marks will be there. Calculation will be hardly anything. 1 or 2 at best may come. Otherwise, no. Okay, next is what, sir? Factory expense, admin expense, selling expense. All this we have a separate category or residual category? Residual category. What is that residual category? Other expense. Add all this. 80, 45, 25. Add all this. 125 plus 125, 150. Check 150 have they shown in other expense in P&L? This is your P&L. Other expense total is how much, sir? 150. That's what they've added. They prepared a note for it, but that's okay. We have identified, no? So let's not worry about the notes. Or if you want, you can come to the notes and tick off. So these 3 components we can tick off. Okay, sir? All right. Next is what, sir? Debenture interest. Debenture interest, where it will come? In P&L under which category? Under finance cost. How much? 30. Check, have they shown finance cost 30 in P&L? Finance cost P&L 30. They prepared a note, but for one item and all, don't prepare notes. If you have more than one item, prepare note. Otherwise, not required. If you have time, prepare it. Otherwise, not required. It's okay. Yes. All right. Next is what, sir? Come to the credit side. Share capital. Where will share capital come? In balance sheet. Usually, we prepare note number 1 for share capital. What is the value of share capital here? They've told 500. But do we have any calls in arrears? Yeah, we have a calls in arrears of 5. Come to note number 1. Share capital is 500. You deducted calls in arrears. So what is the final value? 495. 495 will come in the balance sheet. Yeah, check. They've shown 495 in the main balance sheet. Yes, after deducting calls in arrears. What is the next component? 10% debentures. Where will 10% debentures come under? Non-current liability. Under non-current liability, we have a category called long-term borrowings. Under long-term borrowings, you will show 10% debentures. Yes. So in the main balance sheet, long-term borrowings, directly they put 300. Usually they prepare a note, but you have multiple components or only one? Only one. So if you have one component under long-term borrowings only, you write 10% debentures, 300, it is fine. If you don't have time. Otherwise, prepare a note, take a call based on time in examination. Next, what, sir? General reserve, P&L, security premium. All these are what? Reserves and surplus. All reserves and surplus, we prepare note number 2. Come to note number 2. How much is a general reserve? 150, 75 and 40. But 2, keep in mind, this is P&L account ka opening balance. What is the importance of this? Sir, current year ka P&L you are still preparing. So when you prepare current year ka P&L, you will get current year ka profit. So that current year ka profit you need to add here because this is P&L ka opening balance. To this you add current year ka profit and you will get P&L ka closing balance. Is that okay with you? Okay. So for now we are able to identify this 150, 75 and 40. Check, come to reserves and surplus ka working note. 150, 75 and 40, no? 150, 75 and 40. We have ticked off. Other things we'll see it later. Next is what, sir? Sales. Sales, where it will come? In your P&L account. Check, in P&L account, have they shown revenue from operations 1200? Revenue from operations 1200. Okay. Next, what, sir? Trade payable. Trade payable, where it will come? Under current liability 30. Check, have they shown under current liability 30 in balance sheet? This is your current liability, trade payable 30. Okay, next one. Provision for depreciation. Provision has what balance? Credit balance. Provision for depreciation may have a credit balance. Will you show it on the liability side? No. This provision is related to what? Assets. This provision is related to asset. This is a provision for depreciation. Da. We don't know. We can account depreciation under 2 methods: charge method and provision method. We already discussed that. So this is they are following what method? Accumulated depreciation method or provision for depreciation method they are following. So provision has debit balance. Or credit balance. What do you do? Instead of showing it on the liability side, it will be reduced from asset ka value. So asset may have PP. We are preparing any working note. Yes, we are preparing working note number 5. Check under working note number 5. Have they shown 150? Working note number 5, provision, they have identified as what, sir? 150. Other things we'll see later. Yes. Okay, next is what? Suspense account. Sir, suspense will come. Suspense will come. No, but that means our accountant has done some mistake. So let's see. Will this come in your balance sheet or P&L? No, it has to be sorted out. We'll see why this comes or how we can sort this out. First, one by one, we are reading. Authorized share capital. So authorized share capital, will we account or will we disclose? Disclose. In fact, in note number 1, note number 1 is for what, sir? Share capital. In note number 1, you have to give a few disclosures. What is the first disclosure? One is the authorized share capital disclosures you need to give. Second one, if any shares are issued, you have to show issued, subscribed and paid up capital. From that, if there is any calls and arrears, deducted. Out of the issued shares, you need to tell if any shares are issued for consideration other than cash, like bonus shares, or if you purchase the asset and gave away cash, or you gave away equity shares, like that. So if any shares are issued for consideration other than cash, that disclosure also should be given. So here, how much is authorized capital? 80,000 shares of 10 each. So how much is that? 8 lakh. Check in note number 1. Have they shown authorized share capital as a disclosure? Authorized share capital 8 lakh. All the numbers are here in thousands. No, that's the reason they've shown it as 800. Okay. Next, what is the next point they've told? The company revalued the land at 9,60,000. Go back. Sir, this is where you need to be a little careful. All the table ka value is in thousands, but this value they have given full. So don't directly compare. This value also you need to represent in thousands. So 9,60,000, if you have to represent in 1,000, what it will become, sir? 960. Correct? So revalued amount is 960. But what is the book value of the land as per the trial balance? Book value of the land is 800. That means you have a revaluation loss or revaluation gain. You have a revaluation gain of how much, sir? 160. What is the journal entry for revaluation gain? First time you did revaluation and got a gain. What is the journal entry? Land account debit to revaluation reserve 1,60,000. So because of this, what will happen? Land ka value will increase. Another reserve will come for called revaluation reserve. Check in land. Have they added 160? Land we prepared working note number 5. Come to working note number 5. Have they added 160? Yes. That means land value will become 960. That's all. One more. Under reserves and surplus, one extra reserve will come called revaluation reserve. Check. Have they added revaluation reserve? Revaluation reserve 160. Okay. Great. Next, what is the next one? Issued share capital include shares of 50,000 issued for consideration other than cash. If you are issuing any shares for consideration other than cash, what do you have to do? You have to disclose this. Where? In note number 1. What is the share capital? Each share ka face value, sir? 10. How much shares total you have issued for consideration other than cash? 50,000. That means how many number of shares you have issued for consideration other than cash? 50,000 divided by 10, which is how much, sir? 5,000. So you need to give this. Check. Come to note number 1. Have they disclosed this? Out of the above, 5,000 shares have been issued for consideration other than cash. That disclosure is mandated. Okay. Next what? Come to the next adjustment. Suspense account. We saw that suspense, no? What is the value of suspense in balance sheet, sir? 10,000 basically it is. That they've given a breakup. So check. Suspense account of 10,000. So in the table they have expressed it in 1,000. That's the reason they've written 10. Here they've written 10,000. That means this is full value. So suspense account of 10,000 represents cash received from sale of some of the machinery. More importantly, the machinery is sold on which date? 1st April 2022. So the year is trial balance is on which date? 31st March 2023. And you need to prepare balance sheet and all as on which date? 31st March 2023. Year is ending on 31st March 2023. But you sold the asset on 1st April 2022. That means you sold the asset at when? Year beginning. So how much did you sell the asset for? We don't know. Check this. You sold the asset for 10,000. Okay. So suspense account of 10,000 represents cash received from sale of asset. Dabba fellows. What is the journal entry for assets sold, sir? Something else. But you know what they passed? They passed the journal entry bank account debit to suspense. They passed the journal entry cash account or bank account debit to suspense. Because that's what they're saying. Suspense account represents cash received from sale of asset. That's the reason suspense account is coming with a credit balance. These are all credit balance, no? Because they pass the journal entry cash account debit to suspense. But hang on, can we pass like that? No. Read the full data. Cost of the machinery is 24,000. Sir, when they use the word cost, what does this cost mean? Original cost. Why is it important? Sir, you are maintaining provision for depreciation method. Whenever provision for depreciation method is used, I told asset ledger will always be shown at original cost, because all depreciation you are transferring to PPE ledger or provision ledger. you're transferring all depreciation to provision for depreciation ledger. So fixed asset ledger or PP ka ledger will always be maintained at original cost. Now, is this asset there or not there? Not there. If asset is not there, means can you show this asset or you have to derecognize it? Derecognize. What is the original cost of the asset? 24,000. That means you have to reduce asset ka ledger by how much? 24,000. Now, one more corresponding component. Provision for depreciation account is required as long as you have the asset. If asset is no more there, provision also should be closed. What is accumulated depreciation or provision on this asset? 20,000. So original cost is 24. You have depreciated this asset by how much, sir? Accumulated depreciation is 20,000. That means what is the book value of the asset? 4,000. You sold it for what value? 10,000. That means you ended up making some profit or you ended up making some sale, or you ended up making some profit or loss. Profit. 4,000 worth of asset, you sold it for 10,000, means you ended up making how much profit? 6,000 rupees. This is the treatment, correct? Now this we have to express in journal entry. Tell me the correct journal entry by looking at this. Let's see. I discussed this with you. And I did cash flow statement also. I told 3 things you need to add. It should be equal to original cost. I give you with entry. What is that? Tell me in entry. Tell me in entry. Entry only, da. Yeah. Tell me an entry for this. Simple, pa. If you're getting confused, did you sell the asset? So money will come in. So bank account, debit. Is the asset there or gone? Gone. So provision is required or not required? Not required. Provision has what balance? Credit balance. How do you close it? Debit it. So provision account will be debited. So first entry will be cash account debit, provision for depreciation account debit. Yes, sir. Now asset is there or asset is gone? Asset has what balance? Debit balance. How do you cancel it? Credit it. Asset is shown at what value? Since you are maintaining provision for depreciation method, asset ledger, fixed asset ledger will always be shown at original cost. That means you have to cancel it to what extent? Original cost. So you credit PP by how much? 24,000. Journal entry matching or there is a difference? What is the difference? 6,000, which is nothing but profit on sale, which will be transferred to P&L account. So the correct entry is this, sir. Cash account debit, provision for, you have written accumulated depreciation. Instead of accumulated depreciation, you can also write provision for depreciation. So the entry is cash account debit, provision for depreciation account debit to plant and machinery to profit on sale. But our super duper accountant simply passed one entry, cash to suspense. That means now we need to rectify. You have to pass a rectification entry. So how should rectification entry be passed? Rectification entry and wrong entry, if you add, you should get the correct entry. That's the trick. So in correct entry, suspense is there? No, suspense, yes, credited. So you need to close. What will you do? Debit suspense account. Is there any mistake in cash account? Cash should be debited by 10. He also debited by 10. So no mistake in cash. So leave that out. What should have been debited? Accumulated depreciation. Did they debit? No. So debit now. Accumulated depreciation, how much? 20,000. What and all should have been credited? PP and P&L. Did they credit? No. That means now credit. PP account debit to P&L. So this is your rectification entry. They do not ask the entry. Okay, you don't have to write the entry. This is just for your reference. Now this impact you have to give it in your balance sheet and P&L. Okay. Now one by one impact. Accumulated depreciation. Accumulated depreciation is nothing but provision for depreciation. So this is the provision for depreciation relating to the asset sold. If asset is sold, means depreciation balance will be same or it will reduce. For provision, you are maintaining a separate working note or PPE ka working note only. In PPE ka working note, due to this adjustment, provision for depreciation balance should increase or reduce due to this. Asset is no more there. If asset is not there, means provision for depreciation required or not required? Not required. So 20,000 provision for depreciation you need to reduce. Check have they reduced. Note number 5. This one depreciation 20,000 they have reduced. All the numbers are in thousand. So 20 they have reduced. Okay now. Sir, did you sell the asset? Yes. Asset was shown at what value? Original cost. What is the original cost? 24,000. If asset is no more there, means asset ka ledger balance will be same or it should reduce. It should reduce by what? Original cost. So 24,000 have they reduced? Yeah. Is that okay? That's another tick mark. This 824 minus 24, they've got it as 800. It's fine. Done, sir. All right. Next impact. So these two impact we have pushed. This is over. This is over. What about P&L 6,000? This is a profit on sale. Profit on sale, you will show it as revenue from operation or other income. Check in P&L, have they shown this as other income 6,000? Yes. 6,000 they have shown it as other income. This is nothing but profit on sale of plant and machinery. These are the 3 impacts. Given. That's all. This way, suspense account also got nullified. Suspense will no more come in your balance sheet or P&L because it is fully closed off by passing rectification entry. You don't have to pass entry in exam. Only for your reference. Okay, come to the next adjustment then. Depreciation is to be provided. Sir, depreciation is to be provided. So already accounted or to be accounted? To be accounted. At what value? Depreciation to be accounted on plant and machinery at 10% on cost. Sir, what is the cost of plant and machinery? 824. 824 into 10% don't do. 824 into 10% don't do. Why? Sir, in this 824, one asset got sold on the first day. How much was our asset cost? 24,000. So in 824, 24 cost of the asset is gone. That too on the very first day. That means, will you calculate any depreciation on that? No. That means you will calculate depreciation only on the balance. Balance is how much? 800. What percent depreciation? 10%. So 800 ka 80% is how much? 800 ka 10% rather is 80. Yes, sir. So what is the journal entry for depreciation here, sir? What is the journal entry for depreciation? Under this method, we are following provision for depreciation method. So the journal entry will be? The entry will be depreciation account debit to provision for depreciation. How much, sir? 80, 80. And depreciation is an expense. Expense, where will you transfer it to? P&L. So P&L account debit to depreciation 80, 80. Now this impact we need to push it in balance sheet and P&L. So depreciation is an expense. It will come in your P&L. We have a separate category called depreciation and amortization. Check and P&L, have they shown 80? Yeah, depreciation is 80. Showed. Yes. Now, this depreciation, what did you credit? Provision for depreciation. Provision for depreciation already has credit balance. Again, you credited means its balance will reduce or increase. Increase. Check for provision for depreciation, you are maintaining a separate note or PPE ka working note. Come to PPE ka working note and have they added? Yes, they've added. Okay. Why have they reduced to 20? Because this reduction is to plant and machinery sold. Why have they added 80? This is current year ka depreciation. That's the reason. Okay. That means what will become the provision ka balance? 150 minus 20 plus 80 is what? 230, 210. Okay. So from 800 value of the asset, reduce 210 provision for depreciation. So final balance of PP will become how much? 590 rupees. That you will show in your balance sheet. Easy, Saru. Next, Saru. What is the next one, sir? Bank balance includes 5,000 with ABC Bank, which is not a scheduled bank. Sir, what is the total bank balance that they've given in main trial balance check? Total main bank balance is how much? 28. In this 28, they are saying here, in this 28, they are saying 5,000 is with ABC Bank, which is not a scheduled bank. So in 28,000, here the total cash and bank balance is 28,000. If 5,000 is not with scheduled bank, means balance 23,000 will be with the scheduled bank. This is calculation or this is disclosure? Disclosure. Where do you show cash and bank under? Cash and cash equivalents. Yes, for cash and cash equivalents, are we making any note? Yeah, cash and cash equivalents, we made which working note? Where is that? Working note number 7. Check, have they given the breakup? Yeah, cash with scheduled bank 23, cash with unscheduled bank or other bank 5,000. So total bank balance is 28, which we identified and already ticked also. Yes, sir. So that means total bank balance is how much, sir? Or total cash and cash equivalent is how much, considering all the things? 30,000. Okay. Next working note. What is the next working note? Make provision for tax at 30%. This will affect what, sir? In P&L account, you have to make provision for tax at 30%. Finally, what is the profit you got? In fact, I think P&L, everything we have ticked off, no? So all income ticked, all expense ticked. Income minus expense only is profit. So calculate tax at 30%. So 546 ka 30% is how much? 163.80. Correct? So what will be profit for the period or profit after tax? 382.2. Yes. 1 second. This provision for tax ka, what is the journal entry? P&L account debit to provision for tax 163.8. Yes, sir. Sir, provision for depreciation, what did you do? You reduced it from the PP. Why? Because that provision was related to PP. Provision for tax, is it related to any asset? No. That means provision for tax should be shown separately on the liability side. Which liability? Current liability. Because taxation liability you will settle after 1 year or within 1 year? Within 1 year. So under current liability, you have short-term provision category. There, this provision for tax should come for 163.8. That is one checkpoint. You should not forget it. Yes, sir. That is one. Already done. Sir, what is the current year ka profit? After paying tax, how much profit remains? 382.2. Where will you show this? Will you add it to capital? In case of company, profit will be added to capital or show it separately? Show it separately. You already they gave P&L account ka opening balance. What is current year ka profit? 382.2. What should we do for that? Add it. Check note number 2, reserves and surplus, current year profit, have they added? Current year ka profit 382.2 they have added. So that means what will become the total P&L balance? 457. All the reserves and surplus has been ticked off. So total reserves and surplus is how much? 807.2. That will be pushed to your main balance sheet. Anything else is there? Trade receivable of 50,000 are due for more than 6 months. Sir, what is the total debtors that they have given in the balance sheet? Check. Where is that? Here. Trade receivable is how much? 1 lakh or 120? That is in thousands. So total trade receivable is 120. In that they are saying 50. We want it in thousands. No. In this 50 are they saying more than 6 months? In 120, if 50 is outstanding for more than 6 months, means balance will be other debts. So for debtors also you need to give the same disclosure. How much debt is outstanding for more than 6 months and other debt. Check, have they prepared any note for debtors? Yeah, they prepared note number 6. In note number 6, have they given this 6 months outstanding wala check? In trade receivables, they said debts outstanding for more than 6 months, 50. Other debts is 70. Total debtor is still 120. This is just a disclosure, no calculation. Okay, anything else? That's all. Anything else? We kept it pending. Check your notes first. Anything we unchecked? Long-term borrowings, I think we did not make a note. Provision for tax, we directly wrote it. Yes. So rest everything is a total. Yes, Saru. That's all, sir. Everything else is just a ticking off approach. So everything else will come in over here. Manageable. So like this. So first what you do ideally is, normally we prepared note number 1 for share capital, note number 2 for reserves and surplus. But you will not be able to prepare balance sheet unless you know current year ka profit. Okay. For P&L also you need to prepare notes. But you don't know how many notes numbers are required for balance sheet. Hence, what do you do it? Yes, first you always present balance sheet in page number 1. Present P&L in page number 2. First page mein, when you are solving, you present balance sheet ka format you have. Then you have P&L ka format. Then start your notes to accounts. Okay, leave around 2 pages. Those 2 pages are for your notes to the balance sheet. Then start notes to P&L. Don't give any numbering to notes to P&L. Only prepare notes. Just write note. Note number you write. Numbering you do it at the end. Start your P&L notes and prepare your P&L. Once current year profit you know, can you close balance sheet? Yeah. Then balance sheet you know, note number 1 is for share capital, note number 2 is for reserves and surplus, note number 3 is for long-term borrowings. Then if balance sheet ends at note number 5, P&L ka note will start from note number 6. Then you start P&L ka note number. Is that okay? Prepare in this format. Because usually, if you just check Companies Act, no, part 1 of Companies Act deals with balance sheet. Part 2 of Schedule 3 of Companies Act deals with the P&L. Hence, first you will always have to present balance sheet. Then you have to present P&L. But for preparing balance sheet, P&L is necessary. Hence, you don't know how many notes are required. So do this approach. Understood what I said? Okay. So is this question में any dumb or not? No dumb. Just the formatting errors. A little practice. So these are very, very simple questions, but the only crux is the time. Time and your memory. These are the only 2 things that will play over here. Okay. So now we'll quickly run through the disclosure aspect. That's what I've given over here. Okay. Sir, first, sir, I think we already know a few of them. In note number 1 is for what, sir? Share capital. What and all you will give? Disclosure you will give? 1, you will give a disclosure of authorized share capital. Then issued, subscribed and paid up capital. If there is any call scenarios, reduce it. Also, one more disclosure. If any shares are issued for consideration other than cash, like bonus shares or asset purchase and shares issued, like that disclosures you need to give. That is one. Next disclosure is, what do you do for call scenarios? Reduce it. If you have taken a loan, where will that loan come under usually? Long-term borrowings, because usually the loans are not short-term loans. Loans will be usually long-term loans. So loan taken, no sir, loan ka you need to give a breakup. What is a loan ka breakup you need to give is, how much loan have you taken from bank? How much loan you have taken from related party? How much loan you have taken from others? In some problems, they'll give you this data. Not a popular adjustment, but can come. Okay, all this will be given to you in the adjustment. They will say your loan value is 10 lakh. Out of this loan, from related party, we took 2 lakh. From bank, we took 8 lakh. That means from other party, we took 0. Like this. So basically, out of the loan, you need to tell how much from the bank, how much from related party, how much from others. And out of this loan, you need to tell how much is a secured loan and how much is unsecured loan. Because whenever you take a loan, no sir, you will give something as a guarantee. So you need to tell both the secured as well as the unsecured portion. All this question we have done it in regular class. Now I can't go through every question, so discussing the main adjustments. Yes. Okay. Next, another part you need to know is bank balance. Bank balance, you already know the disclosure. What do you need to disclose? Basically, banks will be shown under the main category, cash and cash equivalent. Okay. So under this cash and cash equivalent, cash in hand you need to show separately, cash at bank separately. In cash at bank, there are further disclosure. What is that? How much balance you have it with scheduled bank, how much balance you have it with other banks, you need to show it separately. Then when it comes to trade receivables, you need to show how much debt is outstanding for more than 6 months and how much is the other debts. All right. And one more pointer you need to keep in mind is the dividend. Sir, if any dividend, simple thumb rule of dividend is dividend you will account on the declaration date. Dividend will be accounted only in the declaration date. Let's say current year is 1st April 2024 to 31st March 2025. This is our current year. All right. Sir, dividend will be declared in AGMs. No? So let's say annual general meeting was held on 1st July 2025, where they declared a dividend of 10%. For which year? For this year. For current year, they declared the dividend in AGM, but dividend declaration date is what, sir? 1st July 2025. So should we, if we are preparing current year ka financial statement, due to dividend, your P&L balance will reduce. So should we reduce the dividend from P&L balance in the current year or next year? Next year. Dividend is always accounted in the year of declaration. What is the declaration date? 1st July. 1st July 2025 falls within the current year or next year? Next year. So that means this dividend will only be accounted in the next year. You don't have to account it in the current year. Is that okay? In the current year, you only give a disclosure saying dividend has been declared. That is good enough. That's what I've written over here. Dividend declared after the balance sheet will not be accounted but only disclosed in notes to accounts, because dividend you have to account on the date of declaration. That's the thing. Okay. All right. Another portion is, suppose, or maybe I'll put this on hold. One more, I'll discuss another related concept, then I'll come back to this. Sir, there is a small discussion around current assets and current liability. We'll do that and then we'll come back to one last pointer there. Okay. Sir, what according to you is a current assets? Current assets means what? Intention to sell. Huh? Correct only, little refinement. Hey, that is non-monetary item. I'm talking you about current assets. We have discussed this, no? Current assets means cash is an example of current assets, specifically included in definition. Current assets are those which are held for trading purpose. Usually in your golden days, they used to say anything less than 12, current. Anything more than 12, non-current. Yes, that is not the thing. For current assets, we have a specific definition which is called out in your Schedule 3 of Companies Act. One is, if you want to call a component as current assets, cash is specifically included in the definition of current assets. That's one. And current assets are those which are held for trading purpose. Why do you hold inventory? For the purpose of trading, buying and selling. So that means inventory is an example of what? Current assets. Third one is, current assets are those assets which are expected to be realized within operating cycle. Current assets are those assets which are expected to be realized within operating cycle. So operating cycle means it's a time gap. It's a time gap between the day you purchase the goods and sell the goods and recover the money from debtors. So suppose you purchase the goods on 1st April 2023 and you paid 10 lakh rupees to creditor because it's a cash purchase. You purchase the goods on 1st April. Suppose you sold the goods on 1st July 2024 to your debtors. On your debtors, will you make a cash sale or a credit sale? Usually you'll make a credit sale. So let's say credit term is 2 months. That means when will you collect the money from debtors? You sold it on 1st July, so you'll collect the money on 31st August 2024. 31st August, you will collect the money from debtors. Is my statement right? So which day did you invest the money? To purchase the goods, you need to invest the money. So when did you spend the money? 1st April. When did you recover this money? 31st August. What is the time gap between these two? 1st April to 31st August, you count how much is that? April, May, June, July, August. How many months? 5 months. That 5 months only we call it as what, sir? Operating cycle. Operating cycle simply means the time gap between the day you purchase the goods and pay for it till the time you sell the goods and recover money from your debtors. Okay. So current assets are those assets which are expected to be realized within operating cycle. So operating cycle means 5 means we'll prepare balance sheet 5 months, sir. No. So anything is within operating cycle means it is current assets. Anything which is going beyond operating cycle means non-current assets. That's the indication. Okay. So that means every problem you have to find operating cycle, sir. No. If they give you the data, find it out. Otherwise, we normally assume operating cycle to be 12 months. That's the reason that saying is popular. Anything less than 12, current. Anything more than 12, non-current. So in fact, what are they indirectly telling you is the operating cycle. Okay, sir. So you don't have to calculate operating cycle. If the information is given, calculate. In these problems and all, they will not ask. Here they will not ask. In FM, they will ask operating cycle. There we have done such problems. Here, such problems will not be asked. Okay. Excuse me. So operating cycle, we generally, if it is not given in the problem, we assume it to be 12 months. So what does operating cycle mean again? It's the time gap between the day you purchase the goods and pay the money till the time you sell the goods and recover the money. So anything which is within operating cycle is an example of or is a component of a current assets. And last one is current assets are those assets which are expected to be realized within 12 months from the balance sheet date. Current assets are those assets which are expected to be realized within 12 months from the balance sheet date. Sir, let's say current year ka balance sheet you are preparing on 31st March 2024. Okay. So count 12 months from the current balance sheet date. What is that date? 31st March 2025. Sir, in balance sheet means you will show all assets. No? Suppose I have a debtor worth 10 lakh rupees. I have a debtor in my balance sheet how much I have to collect from this debtor? 10 lakh. Now you have to check. If the debtor means you will collect the money from him. If you are expecting to collect the money from him within 31st March 2025, then in this balance sheet, debtor will be shown as a current assets. So don't count 12 months from the date of transaction. You have to count 12 months from what, sir? End of balance sheet date. Current assets are those assets which are expected to be realized within 12 months from the end of the current financial year or from the end of balance sheet date. So from balance sheet date, count 12 months. So if you are expecting to receive money from debtors, like I'll give you an example here. You tell me. Sir, case 1. Debtor of 10 lakh rupees is expected to make the payment or receipt date I will write. We are expecting to receive money from him on 1st January 2025. 1st January 2025. We have a debtor. Okay, debtor is outstanding on 31st March 2024. Has sold the goods. We feel that debtor will pay us the money on 1st January 2025. So in this balance sheet, will you show this debtor as a current asset, non-current asset? What? In this balance sheet, will you show this debtor as a current or non-current assets? You will show it as current asset. Why? You have to count. How do you define whether it's a current or not? Count 12 months from balance sheet date. If you count 12 months from balance sheet date, what is the cutoff date? 31st March 2025. If the debtor is, if you are expecting that you will receive the payment within 31st March 2025, then that debtor will become a current assets. Here, what is the expected date of payment? 1st January 2025. Is 1st January within 31st March or going beyond? It is within. That means this debtor will be shown as what in our books? It will be shown as a current assets. When you prepare balance sheet as on 31st March 2024, this debtor will be shown as a current assets. Suppose if I modify this example and if I make the payment as 1st May 2025. Okay, I have a debtor outstanding on 31st March 2024, but I feel that debtor will only pay me on 1st May 2025. Usually that will not be the case because you will give so much credit to your debtor. Usually no. Hypothetically discussing. So if debtor is expected to make the payment on 1st May 2025, that means in this balance sheet, you will show this debtor as a current or non-current assets. Non-current assets. Why? What is the cutoff date? 12 months from the balance sheet date. 12 months from the balance sheet date ends on 31st March 2025. You are expecting to receive the payment from debtors within 31st March or going beyond? Going beyond. So that means in this balance sheet, you will show this debtor as a non-current assets. Like that. Okay, sir. Okay, tell me what is the once again, what current assets, what are the 4 features? It's not necessary all the features should be satisfied. One of the things are good enough. So current assets means it's either a cash, okay, cash or cash equivalent. Second, it's held for trading purpose, or it is expected to be realized or consumed within operating cycle, or it is expected to be realized within 12 months from the balance sheet date. Okay, I'm using the word consumed here because raw material also you will have. Inventory also is there. Inventory is a current assets. Inventory is a current assets. Raw material ka inventory will you sell or will you consume? Hence consume also is used in the definition. Okay, anything which is realized or consumed within operating cycle is a current assets. If it is going beyond means non-current asset, like that. So if you know current assets ka definition, you can construct your own current liability ka definition. What is first definition of current assets? Cash and cash equivalent. Cut off that. What is the second one? Held for trading purpose. Here also same thing. Current liabilities are those which are held for trading purpose. What is the third component of current assets? They are those which are expected to be realized or consumed within operating cycle. From current assets you will realize. From current liability, will you realize or will you settle? Settle. So redefine that definition. Current liabilities are those liabilities which are expected to be settled within operating cycle. Okay. Then the last feature of current asset was what? Current assets are those which are expected to be realized within 12 months from the balance sheet date. So that means current liability ka definition will be current liabilities are those which are expected to be paid within 12 months from the balance sheet date. There is one more which I discussed you with example, but all this problems, this last one ka, you will get problems in CA final. For now, it's not important. Leave that. Okay, it's fine. I discussed you in regular class. Now I'll not bother too much about it. Another 5-10 minutes I have to waste. Not required. Okay, now. Sorry, balance sheet does not tally means how much marks will be reduced, sir. It depends on the creativity you have done, sir. Can't say like that. Okay, stepwise marking they will give. So each step may, if you have done correctly, the marks will be. So I can't say with certainty how much will be deducted because it's all stepwise marking. It's not that balance sheet tallies means we'll get full marks and all that, because even disclosures will have marks. Like shares issued for nil consideration, you need to disclose. If you don't disclose, 1 mark gone. Authorized capital should be disclosed. You did not disclose, 1 mark gone. Debts outstanding for more than 6 months needs to be disclosed. You did not disclose, another 1 mark gone. Like that. It's all stepwise marking. Like that, everything gone. Okay. Now, why did I discuss all this? Now, why did I discuss all this is one. In fact, here, check. Loan ka. I'll give you a small example. Sir, we have taken a loan from bank. Loan value is 10 lakh rupees. Loan value is 10 lakh rupees. Okay. One, I'll discuss of this first. On that loan, sir, some outstanding interest is there. On this loan, there is an outstanding interest of 50,000. 1 month ka interest have not yet paid. So it is outstanding interest. Sir, loan ka term is 5 years. Loan ka term is 5 years. Now you need to tell me this outstanding interest which you have to pay. Outstanding interest means a liability. You will show it as current liability or non-current liability. What in your balance sheet? This outstanding interest, current liability, non-current liability, what? Non-current. This outstanding interest will be shown as a current liability because this how many months interest is outstanding? 1 month. Will you pay this interest beyond 12 months from the balance sheet or you'll settle off soon? Settle off soon. That means this outstanding interest you will show in the balance sheet as a current liability. How about this loan value? Loan ka term is how much? When will you settle this loan? In 5 years. Is that okay? Loan ka term is 5 years. Every year you will repay principal. Hang on, I'll build the example. Is that okay with you? So loan, if I say term is 5 years, means the settlement is happening within 12 months or beyond 12 months? Beyond 12 months. Let's say current year is 1st April 2023 to 31st March 2024. On 31st March 2024, loan outstanding is 10 lakh. Sir, loan no, sir. Principal you have to repay every year annually. Principal has to be repaid in, let's say, 2 lakh ka principal has to be repaid within next year. Okay, everyone understanding? So every year you have to repay how much, sir? 2 lakh of principal. At the end of each year, you need to repay the principal. Let's say 12 lakh rupees was the loan amount. 2 lakh rupees principal is already repaid. So how much is the loan outstanding now? 10 lakh. Now this 10 lakh entire amount, will you show it as a non-current liability or there is a split? Entire 10 lakh, will you show it as non-current liability or is there any split? There is a split. Why? So current liability means what, sir? Current liability means what? Those liability, look at the operating cycle and all you leave. Look at the last criteria. What is the last criteria? Current liability means they are those liability which are expected to be settled within 12 months from the balance sheet date. Within 12 months of the current year, how much money are you expecting to repay? 2 lakh. Principal of 2 lakh you need to repay. So that means out of this 10 lakh, 2 lakh you have to show it as current liability. Balance 8 lakh only you have to show it as non-current liability. Understood? Everybody good? Why? Because this 2 lakh payment is expected to be made within 12 months from the balance sheet date. That's the reason. This 2 lakh, no sir, we call it as current maturities of long-term debt. They will give this adjustment in the question. Current maturities of long-term debt is 2 lakh. They'll tell like this only. Loan value is 10 lakh. It includes current maturities of 2 lakh rupees. Hence, what you have to do? So, what they're trying to say is, total loan value is 10 lakh. In that 10 lakh, 2 lakh you have to settle within 12 months. Means this 2 lakh you have to show it as what in balance sheet? Current liability. Balance 8 only you have to show it as non-current liability. This also is popular, has been asked quite a few times in examination. Overall, did you understand? Basically, current maturities of long-term debt, you have to show it as what, sir? Current liability. That's another point that I've written over. Okay, this is all with respect to the disclosures and P&L and balance sheet. The main aspect here is the disclosures. That's all you need to remember. This much you remember. These are the common disclosures that usually comes in the examination. Okay, people. Okay, great. Now, current assets, current liability also we have discussed. All this also we have discussed. It's fine. And this is also okay. Next, maybe one point I would like to discuss is another type of question that can come for 4 to 5 markers from this topic is declaration of dividend from reserves. Declaration of dividend from reserves. Sorry, usually you pay dividend out of what? You will pay dividend out of P&L, correct? Out of profits only you will pay dividend. I'll give you a small scenario and immediately we'll apply it in one question. Sir, company wants to pay equity dividend of 5 lakh. On equity shares, company wants to pay a dividend of 5 lakh. But profit P&L ka balance is only 3 lakh. P&L ka balance is only 3 lakh. So we have enough P&L balance or we have shortage? Shortage. How much shortage we have here? We have a 2 lakh rupees shortage. You know what the company is saying? That shortage amount we'll pick from general reserve. Company has general reserve. They are saying the shortage we will pick it from general reserve. Can they do it is the question. That's a provision. You understood the concept? This is backed by dividend declaration rules. Again, all these rules is not accounting rules or accounting standard rules. All these rules are given in Companies Act of 2013. What Companies Act 2013 says is, if you have shortage in P&L, you can utilize general reserve to pay what? Dividend. You can utilize general reserve to pay dividend provided 3 rules are satisfied. 3 conditions are satisfied. That condition only I have listed it out here. First condition is the dividend rate that you are planning to declare should not exceed the dividend for the last 3 years. Whatever dividend you're planning to give, whatever dividend percentage you're planning to give, that percentage should not exceed the average rate of dividend for the last 3 years. Like let's say last 3 years, you've been paying 15% dividend on an average. Current year, you should not declare a dividend greater than 50%. Let's say current year, I want to give only 12% dividend. So condition failed or passed? Condition passed. So condition is what? The rate of dividend that you're planning to give it in the current year should not cross. It should not exceed the average rate of dividend for the last 3 years. That's a condition number 1. Second condition is the amount to be withdrawn from the general reserve should not exceed 10% of paid up capital and free reserve as per the latest audited financial statement. The amount that you apply it in the problem. First, I'll tell you the rule. Listen, because you may have to quote all this. Because you can't directly write it. Because if you directly write it, 1 or 2 marks you'll get. You have to write with the condition. So condition you all have to remember. The amount to be withdrawn from reserve should not exceed 10% of paid up capital and free reserve. But do keep in mind this paid up capital and free reserve should be as per the latest audited financial statements. Not unaudited. It should be audited financial statement. Then the third condition is the balance in general reserve after withdrawal should not fall below 15% of paid up capital. After withdrawing, general reserve balance should not fall below. There is a lower limit. Okay. So we'll see this. If all the 3 conditions are satisfied, then you can go ahead and utilize general reserve. And for what purpose? For dividend declaration purpose. So can we look at one question? Come to this particular question. Due to inadequacy of profit in the current year ended 31st March 20x2, XYZ Limited proposes 10% dividend out of general reserve. So they want to give dividend out of general reserve. Straight away they can give, or condition is there? Condition is there. From the following particulars, ascertain the amount that can be utilized from general reserve according to company's dividend declaration rules. So we have 17,500 preference shares of 100 each. They are fully paid up. So what is the preference share capital? 17 lakh 50,000. We have 8 lakh equity shares of 10 each. Equity share capital is 80 lakh. Okay. We have general reserve on, look at the date importantly, on 1st April 20x1. That means this is general reserve ka opening balance. Sir, current year has just ended. So would it be audited or not audited? During the inadequacy of profit for the current year ended. Current year has just ended. The moment year ends, audit will be over. That means what is this? Current year ka data is audited or unaudited? Current year ka data is unaudited. For our condition's sake, we should take unaudited data or audited data? Audited data. So general reserve, check here. What are they told? General reserve balance as on 1st April 20x1. So 1st April 20x1 balance means it is opening balance. Last year ka closing balance will become current year ka opening balance. Last year is auditing done or pending? Current year auditing is pending. What about last year? Audited. Yes, auditing is over. That means this general reserve ka balance is as per what, sir? It is as per audited financial statements. Understood? Because for condition, we need to take audited number. That's the reason. So is the general reserve an audited number? Yes. First of all, is it a free reserve? Because condition talks about free reserve. Is it a free reserve as per audited financial statement? Yes. Maybe we'll write like this. Is it free reserve as per audited financial statement? Is it? Yes. So how much is that? 25 lakhs. Capital reserve. Is capital reserve and revaluation reserve free reserve or not a free reserve? They are not a free reserve. So condition we are testing only for free reserve. So that means will we use these two reserve or not required? They may be audited because it relates to last year. Will we take that or not? We don't want it. We don't want it because we want only paid up capital and free reserve. Capital reserve and revaluation reserve is not a free reserve, so ignored. Net profit for the current year. Current year ka data is audited or unaudited? Unaudited. That means can we consider this for our calculation or should not be considered? Should not be considered because auditing for the current year is not yet over. That's the thing. All right. Average rate of dividend for the last 5 years. Actually, this should have been 3 years, but that's okay. No problem. For the last 5 years, the rate is how much, sir? 12%. So now company wants to utilize general reserve because they feel there is a shortage. First, let's confirm there is a shortage. How much profit is available, sir? 3 lakh. So they gave what? Net profit. I told what? Whenever they give you net profit, it means profit after tax. Sir, from profit after tax, immediately can you give equity dividend or first preference dividend? First preference dividend. What percentage preference shares? 9%. How much is preference share capital? 17.5 lakh. So 17.5 lakh ka 9% you do. How much is that? 1,57,500. So you have 3 lakh profit. In that 3 lakh profit, first you have to pay preference dividend of 157,500. Because if you want to give equity dividend, first you have to compulsorily give a preference dividend. So in this 3 lakh profit, 157,500 will be utilized for preference dividend. So how much money remains in P&L? 142,500. Now check how much dividend, equity dividend company wants to propose. At 10%. 10% will be applied on what? Paid up equity share capital. What is paid up equity share capital? 80 lakh. 80 lakh ka 10% you do. How much is that? 8 lakh. So company wants to give 8 lakh dividend, but profit available is only 142,500. Profit is available or we have shortage? Shortage. How much is the shortage, sir? 6,57,500 is a shortage. That shortage company is saying we will pick from general reserve. Straight away can you pick or condition? Condition. Now can we test the condition one by one? What is first condition? The dividend rate that you're planning to give in the current year should not exceed average dividend for the last 3 years. What is the average rate of dividend for last 3 years? They've given 5 years. That's fine. How much is the average rate? 12%. But we are planning to give only 10%. So condition failed or passed? Condition number 1 passed. Okay, now theory condition. Condition number 2. What does condition number 2 say? The amount to be withdrawn from the reserves should not exceed 10% of paid up capital and free reserve as per latest audited financial statement. They use the word 10% of paid up capital and free reserve. What is the paid up? Did they say paid up equity share capital or only paid up capital? Paid up capital. Paid up capital here it constitutes both equity and preference share. So add all this. Paid up equity share capital you add, preference share capital you add, general reserve also you add. Okay, sir, these two are audited, sir. Yeah, share capital data and all will keep changing every year, sir, or it will be same. Share capital data every year it will change or it will be same. Same. That means these two data will be audited only. Is that okay? That means add all this, sir. Paid up cap. If you add all this, you'll get paid up. How much? Huh? 1 crore 22 lakh. 1 crore 22 lakh 50,000. So what does the condition say? The amount to be withdrawn from general reserve should not exceed 10% of paid up capital and free reserve as per audited financial statement. So calculate this. How much is it? 12 lakh 25,000. So standard is saying maximum you can withdraw from reserve is 12 lakh 25,000. Am I withdrawing 12 lakh 25 or just 657? I am planning to withdraw only 657. So condition is passed or failed. Condition number 2 is also passed. Okay. Now condition number 3. What does condition number 3 say? After withdrawal, balance in general reserve should not fall below 15% of paid up capital. Now, how much is general reserve you have? 25 lakh. How much you're planning to withdraw? 657,500. After you withdraw, general reserve balance will reduce. So what is the reduced balance? From 25 lakh, if you withdraw 657, general reserve balance will become 18 lakh 42,500. That is the actual balance of general reserve. What does the condition say? After withdrawal, general reserve ka balance should not fall below 15% of paid up capital. Only paid up capital. So what is the paid up capital here? 17 lakh 50,000 and 18 lakh. So adding these two, how much you're going to get? 97 lakh 50,000. 97 lakh 50,000 ka 15% you calculate. How much is that? 14 lakh 62. Meaning general reserve balance should not come below 14 lakh. It should not come below 14 lakh 62 500. After my withdrawal, how much balance I am remaining? 18 lakh. Is it coming below 14 lakh 62 500 or much higher than that? Much higher. So that means is condition failed or passed up? Condition number 3 is also passed. If all the 3 conditions are satisfied, can company utilize general reserve? Yes. Final conclusion is yes, company can utilize general reserve to declare their dividend. This is another kind of problem that usually gets asked from this particular topic. Okay. So with this, all the topics ka marathon we have completed.